Welcome to the VSA Capital Tech and Transitional Energy podcast. And hi, Phil. How are you?
Very good, Andrew, and a happy new year to you and some sunny weather back with you from Canada. It's beautiful.
Well, it wasn't that sunny in Canada, actually, and I'll talk about that in a second. But obviously, we haven't actually done a podcast now for nearly a month because of Christmas and me being in Vancouver. So happy new year to all the listeners. I hope you all had a good Christmas. I hope you've all come back and are hoping to make lots of money in 2022. Obviously, 2021 started off brilliantly and ended up rather tough. So fingers crossed for 2022. But as you mentioned here, I spent the first week of January in Canada, in Vancouver, because I thought everything would be pretty quiet in the city. So why not go and do some business out there? Now, I was visiting a lot of mining companies, but I did visit two tech and transitional energy companies. So the first that I visited was Invinity Energy Systems, who obviously have a facility in Vancouver where they make the stacks. And I spent quite a lot of time with the management, Larry Zulch and Matt Harper, out there discussing a lot of things and basically going through what the plan was to take the share price from today at 92p to hopefully £2 at the end of June. Now, most of that discussion I can't just talk about on this podcast, but that is the sort of plan, and it's a plan we set, obviously, regardless of where markets go, because you can't bank on markets. Let's see if we can deliver it, is the answer. But I mean, I think what we do know is that it's a make or break year for Invinity Energy Systems. You know, they've been nearly there for quite a bit of time. This is the year they've got to deliver. And the first thing they need to do, which I hope they will, is obviously come through with a whole bunch of new orders so that you can see the order book building up. But that's a quick summary on that. Any other questions you'd ask me, Phil, on that I can maybe answer?
I don't think so. I mean, just to remind listeners that Infinity Energy Systems is a client of ours, and they have battery storage technology, and that's used as backup for grid generation. They're involved in the Big Oxford project, which is for EV charging, and their batteries work alongside lithium batteries. So Infinity got flow batteries. So a lot going on there, and a very, very active markets that they're aiming for, real high growth market.
Yeah, the market is called LDES, which is long duration energy storage. And there are other technologies out there. We just seen Goldman Sachs put $250 million, haven't we, into a Canadian company called Hydrostore, which uses basically compressed hydrogen to store energy. It's for a different function, really, to vanadium flow batteries, but the whole LDES space is gathering pace very rapidly. Now, the other company I saw whilst I was out there is a company called Nano One, which basically it creates a more efficient cathode than you currently have, and it can work with pretty much any battery at all. It has numerous partnerships with numerous battery companies all around the world. Has to keep a lot of them sensitive, but it's what I would call the arm of cathodes. And it's fascinating. I mean, if people want to know more about Nano One, probably ask me directly or contact the company. They've got quite a good website that explains a lot of it. But it is a little bit of a science project. You have to understand a little bit of chemistry. The guy who runs it, Dan Blondal, is an absolute expert on the whole battery market. Fascinating guy. I spent about 6 hours with him in Canada. Really did test some of my chemistry knowledge from university. Has to be said. It's been a pretty successful stock, to be honest. It's going well. But a fascinating company. I would love them to dual list. They did have a partnership with Johnson Matthey, because obviously they were developing the ELON battery. Unfortunately, we know Johnson Matthey announced a couple of months ago that they were going to pull out of that battery manufacturing capability because they'd spent $140 million and probably could see they're going to have to spend another couple $100 million for something that wasn't really getting any traction. Today, they have announced also that unfortunately nobody wants to buy that division. So they're basically going to do an asset sale, which is rather disappointing for Nano One, because I don't think they'll get much in the asset sale either. So it's rather disappointing for Johnson Matthey as well, which has been absolutely smacked as a stock. I think what investors now should bear in mind, I think if you remember when we started doing this podcast, we were quite critical about Johnson Massey, partially because we thought ELON wouldn't work. We did then turn slightly more positive, partially because Nano One did a partnership with them, and I think that gave them a much more bigger opportunity. I think down at this level, it's down at sort of sub £20. My own feeling is it's probably a stock worth looking at because they're involved in a lot of other things like hydrogen, and obviously, of course, they're still involved in all the sort of catalytic converter metals and that sort of thing. There's more Johnson Matthey than just batteries. Obviously, there has been a bit of a shake up of the management as well, so you've got to bear that in mind. But it's certainly one that I would be looking at the moment. I think it's in quite an interesting flux position.
Yeah, no, that sounds very interesting. I mean, I don't, unrelated to Johnson Matthey, I don't know if you've seen, Andrew, but a number of the global automakers have been reporting their results, particularly the European makers, and there are 3 of the global top 10 in there: Mercedes-Benz, VW, and BMW. And there's some interesting figures coming out of there. And so Mercedes-Benz was saying that in 2021 that their sales had declined 5%. And part of that reflected kind of global chip shortages. And again, this year we're going to be looking at the supply chain and watching out for changes in the supply chain. Hopefully things like this easing. But the VW reported that they had seen they'd suffered a drop of 8% in sales. And again, they were being affected by some of the supply chain issues. But they said VW, and there we know they're investing very heavily in battery technologies and EVs, that their sales of EVs and hybrid vehicles nearly doubled to 7.5% of their global sales. BMW, on the other hand, had actually seen its sales rise by 8% in 2021. But again, they pointed to a doubling of their electric car sales. So, we've been discussing this so much, the sort of, the transition to electrification in transport, and here you can now see it really is gaining momentum for some of the major makers.
Well, I mean, again, it doesn't come as a surprise to us, does it? So
no, indeed, and that's why, exactly why we've been covering it. Yeah.
Now, there's been quite a lot of news out in the last couple of days, actually. We might just touch base on some of them. I noticed today, actually, we started one, which is quite a little bit of a favourite of mine, which is Tecmar. It was one of our picks and shovels stocks, but they just won a big contract, actually out of the Middle East, didn't they? But it's a $10 million contract, I think, which is definitely good news. I mean, there's got a new management in there, but they've been there for a little while now, but they do appear to be doing all the right things. And if they are doing all the right things, then I think the stocks looks pretty interesting. And I don't know if you've got any comment there, Phil.
Yeah, I mean, the cable protection systems for subsea structures, for securing them. For things like I think they're involved in wind power, interconnector cables for power. So it's a good area to be involved in. And I mean, what struck me is it's a smaller company. It's been around for a long time, but clearly it's got good market reputation in the sector it's in, and is able to. I was impressed that they sort of won this business. Well done them.
Yeah, and we've spoken to them a few times, haven't we? Sadly, it was on Zoom, but we have talked about visiting them. I mean, the stock's up a little bit today. It's up 5-6% to 54p, but think back a couple of years ago, they were trading at 175p, so there's plenty of upside to go there, I think.
Yeah.
I think the other one, another one today that had news, which actually rather intrigued me, was Ceres Power. They put a trading up today and also a joint venture update today. I think the revenue and operating line was expected to be in line with previous guidance, so that was all sort of there. And then they went on to sort of about why Weichai and their partner in China was the relationship was still going fine, sort of thing, progressing positively, look forward to providing further updates, etc., etc. I mean, it was sort of, why are you telling us this sort of thing was the question I was asking myself as I read it. I thought it didn't really sort of, is there a worry about the JV that maybe it isn't going fine? So I thought that rather led to a few questions, shall we say. Stock's off about 10p today. It may be that I'm just reading far too much into it, but worth pointing out.
May well be, but yeah, it's just one of those things when companies do mention something quite specifically, you're always asking yourself, well, why are they talking about this? So I can kind of understand that, and they've said we look forward to providing a further update to the market as soon as we are able to on the strategic relationships. So let us wait and see on that one.
Now, one that actually was, and one we talked about quite a lot, but actually had very positive news today, was IP Group, where they put out a pre-close trading statement and said that they expected profit to be basically above expectations, and also the NAV per share is anticipated to be above 165p, which with the stock trading where it is at the moment, about 115 or something, it is up 5%. To my view, leaves it at a massive discount to NAV, and yet the NAV is growing as well. I think the stock is way too cheap. It has traded around 140p, 145p relatively recent, actually, even maybe higher. I think it touched base almost about 160. But of course, it peaked during the Woodford era at around 250. I'm not saying it's going to go back to that level, but I certainly think that from here there is plenty of upsides. IP Group, in my view, is a buy. I'll be absolutely honest, I do own some myself in my SIP.
Well, I was having a closer look at this one as well today, Andrew, and I'm off to say I'm with you on that discount in terms of the valuation. But I think investors need to know as well, there's been quite a bit going on in the company. In terms of so I was just looking kind of when it peaked at September 10th, that Imperial College, who are one of the original founder investors, they've been selling down their holding. That's been picked up by very large institutions. That's had a little bit of an impact. They announced on the end of September that they made £84 million from the Oxford Nanopore IPO, which sure as hell validates their business model. But on the 6th of October, they stated that Alan Albury, the CEO, Mike Townsend, were finally retiring and stepping down. So there's a bit of a board change there. They announced the share buyback program, which they've been doing very, very actively. So all this sort of background stuff is masking, what you're actually saying is look at those trading results today. And they are, they're very strong. And these things are trading at a discount. So there we are.
And in my view, I mean, there's a collection of these, what I describe as relatively early stage technology groups. So there's obviously IP Group is very well known. Draper Esprit is very well known. And they are very attractive ways of getting a broad range of early stage IT or biotech and all this sort of stuff into a pension fund or something. It's a lot safer than one direct investment. But you've got the potential of getting, a unicorn. And talking of which, Phil, you should just talk through one of our corporate stocks, Frontier IP, on that note.
Yeah, I will. So, Frontier IP Group, the ticker is FIPP. The market cap is about £54 million, and the share price is now 98.5p. And this is one we cover in research. What they do, they provide commercialization services in return for shares in private technology companies. So they work with these early stage companies. They help them to build their customer bases. They help them, give them advice on getting experts in to develop their technology, but basically bringing, commercializing the products. And a lot of these companies are university spin-outs. They work on the main UK universities, involved in AI, robotics, pathogens, food tech, number of areas. Anyway, they had an interim trading update. And what we've seen with Frontier IP was in 2021 that the value of their equity stakes increased by 64%. And a driver of this one was a very early stage holding of theirs in a company called Exscientia. And Exscientia has developed AI for drug discovery, and it's being used by the global farmers. And it IPO'd on NASDAQ. So they've seen a significant uplift in investment from that. But it IPO'd on a valuation of, I think, a couple of $1 billion. So, this was originally a spin out from Dundee University. So it just shows, what can be achieved. But they had a good trading update for their interims. They're reporting a NAV, last reported NAV was just under 70p. So they're on a NAV, they're trading on a premium, but we could see how, their model, versus IP Group, probably they're in an earlier stage than IP Group, so you would expect it, maybe a stronger uplift, but good set of results from them.
Yeah, and actually, we are just in the process of floating an even earlier stage sort of portfolio company called Superseed Capital, which has a very intriguing deal with British Business Bank that basically gives you financial gearing to investors. It's like getting the equivalent of EIS. So you get a much significantly enhanced return on your capital, and they are very early stage sort of AI business companies, aren't they? I don't know. We're doing it at the moment. We're due to close the book about this time next week. It's quite small to start with. We just want to get it going. But if anybody listening has any interest in that, then do give us a shout. We can probably facilitate your interest, shall we say, although just be aware that it has to be for professional investors only, but you can sign up with us as a professional investor because we are not producing a prospectus, we're simply doing an emission document. And so you can't just distribute to retail openly. Don't know if you've got any comments on Superseed, Phil?
The great super management team, very experienced, very used to dealing with early stage tech, focused on its UK earlier stage tech, its seed investments. I think it's an exciting area to be in. There's a lot of investment going to the UK and a lot of good companies coming out. And we've seen with Frontier IP Group some of their holdings. We've seen that with IP Group and a number of their holdings and great successes. These fantastic tech companies have to start somewhere, and this is where seed investment is so important. It's what the guys at Superseed do.
Yeah, I know you can get much higher returns, and they're obviously making investments you couldn't make as the general public. But look, let's be clear, there won't be a lot of liquidity in it. It's one of those stocks you buy and you sit on for at least 5 years in your pension fund, and hopefully, it goes up 3, 4, 5, 6 times. Get a unicorn, it goes up 10 times. Anyway, moving on. I'll tell you what I noticed again today. There was a lot of news today. But that rather intrigued me, which was a statement out of Hydrogen One. I don't know if you saw that. It recently IPO'd as a fund to sort of invest in hydrogen companies. They raised just over £100 million. But they put out an announcement today, just sort of updating the market. It actually said they wanted to raise a lot more money already because they've seen such a huge pipeline, and they've identified an investable universe of over £17 billion in private hydrogen assets in operational companies and hydrogen projects. That's a huge sort of size of market for investment that they're looking at, isn't it?
Yeah, well, yeah, that's that is quite stunning. I mean, we've been sort of tracking announcements in the area, and you can see increasingly the bigger oil players are getting involved in this and the chemical companies, but it shows how this market is taking off. Good Lord. Yeah, it's interesting. 200 private hydrogen asset opportunities identified compared with 120 at the time of IPO. Fascinating.
Yeah. It is, it is quite fascinating, actually. So anyway, there we go. Anything else you've seen, Phil?
Yeah, well, we have been, as you say, a lot of trading updates coming out. One that investors may have got involved in at IPO is Darktrace. Cybersecurity company. Ticker is DARK. 3 billion market cap. They've had a trading update. Look, it is cybersecurity. It's trading on an EV revenue multiple of about 9 times for this year, and that's falling to 7 times. Next year. These things don't come cheap. It's AI for cyber. It's highly specialized technologies. But they had a first half trading update, and they said that their customer base, all important, had grown by just under 40% year on year. and that their annualized recurring revenue that had grown to about $400 million, year-over-year growth of 45%. So clearly getting an awful lot of market traction there. A very, very strong growth. And it's expecting higher EBITDA margins. So that's it's quite a punchy, quite a positive statement coming out of Darktrace. And their shares the shares did well from the IPO, then they came off, and so I think they probably ticked up a bit today on this. Wouldn't be surprised.
Yeah. Anything else you've seen?
Gresham Technologies.
Oh yeah, good point.
Software company, cloud services, and their software is used by primarily, I think, financial services firms, manages things like risk, reconciling accounts, compliance. It's been around for quite a long time. So they're used by, I think it's said here, 300 organizations worldwide. There you go, great little UK software company here. Product being used globally, something we always look for. They had a trading update for year one. They are expecting their revenues up by 48%. Now, part of this is to 36.8 million. There's a contribution of 5.4 million from an acquisition made there. So, you work that back, and it's still a very strong double-digit increase in the organic revenue from the company, and they're expecting their EBITDA to be up by 50%. But again, there'll be an acquisition contribution in there. You just kind of strip that out, and you can get the organic growth. And this has got strong organic double-digit growth in there. So they're sat on cash as well, which we always look for. They've got 9 million in cash, got no debt. Now it's 153 million market cap, but it's on the EV/NR multiple of 3.4 times and 15.5 times EBITDA, which to my mind is nay too bad if they continue the pace of growth that they're seeing. So, and they also said in their trading statement that following strong Q4 performance, overall revenues, earnings and cash are all ahead of market expectations, which is something we always look out for.
Yeah, that's good. That was obviously came out on Tuesday, didn't it?
Yep.
Also on Tuesday, there was a trading statement from Electro Components, where they said full year profit performance is anticipated to be slightly ahead of consensus estimates. So another piece of good news there in the space. In fact, in general, we also, of course, had this morning the bellwether of the chip industry, which is TSMC, or Taiwan Semiconductor Manufacturers, TSCM rather, sorry. And their Q4 profits were up about 16.5%, which was again very positive. So it does appear that the whole sort of sector is still going well, isn't it?
Oh yeah, and they're it's TSMC, Taiwan Semiconductor Company. Yeah, and they've also said they're upping their capex as well, which is always, in the chip industry, you're looking for as a real indicator of what they think is going to happen. And they said they're expecting their full year capex this year to be about between 40 and 44 billion dollars versus $30 billion last year. Wow, that's some scale of investment that's going on there. But yeah, Q4 revenues up by 24%. I was also looking at the Nasdaq's been flatlining over recent months, but one of the biggest share rises last year was Nvidia. Primarily known for their graphics processors, but of course their processors are used very widely for Bitcoin mining, but in data centers, very, very powerful, but Nvidia. And so, yeah, I mean, the outlook for the chip industry, I think, just generally is very good, Andrew. And the electric components results, I think they've done amazingly well. You look at the thousands of products that they supply, global supply issues, and how electric components have been managing that. I think they've been doing really well. That's something, we'll be looking out for in terms of news flow this year, is what is happening in the supply chain, because it has had quite an influence on share prices over this year, and of course it, contributing to inflation as well. So we'll be watching that closely.
Well, maybe we should just end on a bit of a macro point, because, as you say, supply chain issues have been a huge point. In general, the tech industry is moving forward, which is what you expect, because we're still going through quite a sort of revolution. But, we're also now getting these hugely high inflation numbers. of sort of 7% or something, and I don't know if you know, but since 2008, the in the US they printed 40% more dollars, which actually, if you think about it, is basically a devaluation of your currency by 40%. And one of the things with all of this, pumping out QE and currency everywhere, and now with inflation coming, it's been great for certain assets, such as the big tech companies on NASDAQ, like, Apple, which is now, whatever it is, a $3 trillion company, and all of these big tech that are on quite high valuations. And I think one of the big questions everybody's asking is, will big tech, whatever it's called, the FANGs or whatever, will 2022 be the year they come down to earth slightly?
Spot on there, Andrew. And in inflation, and if interest rates start to rise, obviously, it does impact the way that the technology companies are valued. And again, and you're right on those. We'll keep an eye on those multiples as well. So we will see, and I think it's this Friday, the US earnings season kicks off. So we'll be watching out for the results from the big tech, from their outlook. And ultimately, in terms of valuations, it's determined by growth rates and what kind of growth that they're expecting to see. So there'll be
and of course, growth is connected to consumer spending. I mean, for instance, at the moment we're seeing fantastic results in the UK out of the big retailers, but that's last year. This year, with the inflation numbers we're seeing, the energy price increases we're seeing, et cetera, so there's going to be a massive squeeze on consumer spending. And therefore, it's just on the cards that consumer products actually may have a much tougher time in 2022, which could hurt some of the more tech-orientated consumer product companies.
It could indeed. Yeah.
So you started the podcast off saying the sun was shining. Maybe there are a few dark clouds around. I don't think say it's going to rain. And look, the French have allowed us back in, so we can all go on our ski holidays again, hopefully. So there's a bit of good news. On that note, unless you've got anything else, Phil, we'll call it a day, shall we?
I don't have anything else. We'll call it a day, and I look forward to next week's podcast.
And look, if anybody wants us to talk about anything, anybody disagrees with what we've said, then please let us know. We're just trying to give a view. We're just trying to help people along, trying to give them some ideas, trying to help everybody make a bit of money. So, but feel free to try and correct us or ask us questions. Phil, we'll speak next week.
We will do. Take care.